Okay, now I hope that you are able to see the agenda slide, right? So I'll just quickly run through. We will have an introduction to GST. We will understand GST. We will touch upon certain highlights on the GST. Then we will discuss on the registration process. Then the key compliance requirement that is critical for us to understand, for us to be compliant under GST regime. We will also touch on the existing law and compare with, okay, what major changes that have happened and what are the existing law that have been slightly modified, basically, I mean, like covering the loopholes or the drawbacks that are being there in the current law, how those things are taken care in the GST. Then important thing is that what will change, I mean, what should be the preparedness of us for the GST. And lastly, we will talk about the consequences of non-compliance. So before we get into the GST, we must have heard about this major big hurdle that was first, the GST needs to cross, which is basically the Amendment 122. We have heard about it. So let's just try and understand what is this Amendment 122 and why it is important. If you see our country is a federal system of taxation. Now, what do we understand by federal system? So, as we know that, there are certain taxes which are charged by the central government. What are the taxes that are levied by the central government? The custom duty, excise duty, service tax. These are the levies that has been levied by the central government, and central government has the power to levy taxes on basically manufacturing of goods and provision of service under the current law. States have power to levy taxes broadly on sale of goods. Then you have entry tax, then you have octroi. Now, since our legislation has the power very clearly distinguished or demarcated between the center and state, so under the current regime, the center cannot charge tax on sale of goods, and vice versa, the state government cannot charge tax on manufacturing of goods or provision of service. So this was the first amendment that is required under the legislation, which now gives powers for the state and the central government to charge or levy tax on goods and services. So that's how you have this goods and services tax. So with the passing of this Amendment 122, now the central and the state government have the power to jointly levy tax on goods and services. Okay. So what does this mean, right? So again, we must have heard that this is a major revolution that is going to happen, and it's a biggest tax reform that is going to happen. Definitely, it is going to be a significant indirect taxation revolution in our country since independence, right? So we will also discover that why it is such a big revolution and as we move forward. The second one, again, we must have heard about this tagline that one tax, one nation, one market, right? So one tax is, again, if you see, for goods and services, right? So there is going to be one tax levied. Now these are something, one, we have to keep in our mind that the draft model law was made available on the public domain, and this whole session that we are going to cover based on the law that stipulates how the GST law needs to be implemented is one. Number two is there are further, on a daily basis, there are some updates that are happening. We will also keep you updated on that. So the idea of GST is there's going to be one tax limit, which means basically throughout the nation, the rate of tax is going to be a single taxation, and it is applicable across the nation. Currently, if you see, under excise, we have a different rate, and especially if you take VAT, different states have different rates for the same product, right? So this is the significant or the major revolution that is going to happen under GST, which is basically going to be, in simple term, it's going to be just one tax, one nation, and one market. So it means today, for me, the entire country is going to be the market, and I can now conduct my business and be compliant in a very, very simpler way. And it is not just the tax reform, the GST we are talking about. It is going to be an outright business reform. So we will also, as we move forward, we will understand what are the implications. So in our agenda, we also said what should be our preparedness, what is going to change. So we will discover that why are we now stating that it is not just a tax reform. It is not that the rate of tax is going to change. It is not that the forms are going to change. There is going to be a major business reform that is going to be happening, and the businesses need to be prepared for this major change. And GST is just not an incremental tax. It is a transformational tax reform that we would be seeing in our country once it is implemented on 1st of April 2017. One very important thing that we have to know about the GST is destination based consumption tax. So what do we understand from a layman's perspective? First, let us take the current state. If you see the excise, right? So in excise, the duty of excise is levied on manufacturing of goods, which means the duty is levied at the source. Now, in case of VAT, if you take, VAT is levied on sale of goods. So whenever I now start supply of my goods, or when I invoice my goods, when I initiate my sale, the VAT is applicable. So which is basically, if you see currently, these are at source. Now this whole thing is now changing under GST. It says now it is going to be destination based tax and it is consumption tax. We will understand what is the consumption tax that we are talking about. And GST is going to be highly compliance driven law. So when we say highly compliance driven law, it is basically at the grassroots level of your business information related to the compliance. Now when I say grassroots level, it is going to be every purchase and your every sales is going to be tracked, monitored, reconciled and accepted. So what are the key milestones of GST? So one, we spoke about Amendment 122, right? So on 14th of June is what the draft model law was made available on the public domain, and the intent is that people will go through the model law, and then various tax practitioners, tax experts, the businesses will understand the model law and then see what are going to be their implementation challenges, or what are the difficulties that they would face based on the model law that has been prescribed by the government. And the expectation is that people will now go back to the government saying that, okay, what are the difficulties, what recommendations that they want to do, such that they can make the model law easier, better, and it is implementable easily and businesses can run, rather than being concentrating more on compliance rather than not concentrating on the business aspect of it. The first step was that on 3rd of August the Rajya Sabha passed the bill, right? So next, on 8th of August the Lok Sabha passed the bill. Then on 8th September President has given the assent, which means basically now GST can be implemented anytime. So the time that we are saying that it is going to take time for us to be prepared, and a lot of infrastructure, since we are saying it is going to be completely compliance driven, and also, so since we are saying it is compliance driven, it is also going to be technology driven compliance system in our country. So the infrastructure needs to be built. So that is where the government's expectation is that we should be ready by 1st of April 2017. So once this is done, on 12th September, the cabinet approval to form the GST Council. What is this GST Council? See, one major thing that is going to happen now, which has never happened, that's why we say that it is a major revolution that is happening in our tax reform. There was central government, the central governments were administering the central taxation. There is state government, the state government were administering the state taxations, right? So these were two different machineries we were working in isolation. Now both these state and central have to come together and they have to work together towards the GST implementation, or towards the GST taxation system that is going to be implemented in our country, right? So the GST Council is basically to get a consensus, like if anything needs to be changed. So today what is happening, like, some state government thinks that, okay, I need to now change the form, right? So now they notify and then the form is changed. Some other state government says, okay, today I'm going to increase 1%, or I'm going to introduce surcharge, I'm going to introduce various taxes. They just do it. I mean, like, based on the approval that they get from their state level approvals. But today, since it is going to be central and state and it's going to be one single tax that's going to be charged, so we need to have this consensus of all this 36 states and union territories in our country, right? So the GST Council is basically, it's basically the union finance minister will be chairing the GST Council, and all the other state finance ministers will be member of this council. So what is that council going to do is basically any decision that needs to be taken, like for example, if they have to increase the rate. So today the GST Council is going to finalize the standard rate. So as of now, we still have no clear-cut rate that has been prescribed as the standard rate under GST. There are talks between 18 to 20, 22% is what should be the standard rate. So the GST Council is the one which is going to basically discuss, and then any decision that is going to be taken to do or not to do, 2/3 majority of the council members need to vote for it or against it. Only then any decision is going to be implemented, or it is going to become the law. So on 16th, the government has notified the GST Council, which means basically it says the GST Council has been formed. And 22nd and 23rd was the first GST Council meeting that took place, and one major decision was taken during the GST Council is that the threshold limit, when we come to the registration part, we will discuss about it. From the earlier threshold limit which was prescribed, okay, there is a change that has happened. There is an enhancement that has happened in the threshold limit. Okay, so this is how now the GST Council is going to meet, and then the complete rollout of the GST law will undergo, and then the finalization is going to happen. Yesterday, so the draft rules were made available on the public domain, which is basically regarding to registration, the payment, and the tax invoice formats and other thing. So another important thing that I just want to discuss, because today we are understanding this law from a layman's perspective, right? So in any case, I'm definitely not going to use any jargon or any words that are, I mean, like, I'm not even going to relate to any section or anything. I mean, like, we will be discussing about understanding GST from a layman's perspective. So first is the model law, which we are saying is basically the act. So what is this act? Act says what to do, right? Now, what is this rule? A rule is going to now say how to do. Right? This is the difference. So today, what to do is in the draft mode, which people can give their opinion, saying that this is good to do or not good to do, or we can do it better. The rule is now going to talk about how to do it. So today, if you see, the rules and the formats are available, which means, what are the registration, like if a new dealer needs to register under GST, okay, what are the rules, what are the conditions, I mean, how is he going to now comply towards registration norms? Okay, the forms have been prescribed. Okay, what are the types of form? If you want to be a regular dealer, what is the form number that you need to use? All this we know about it. We have seen this in VAT, excise, and service tax. So similarly, they are talking about the payment, and they are talking about the tax invoice. Now, as we speak today, further some more draft rules have been published on the public domain related to the written format. So which means basically what are the different types of return that are there, and the formats also have been published as of today. And so we will now start getting every day we will start getting, iteratively we will start getting this information such that, now we get more clarity on how to do part of it. Okay. So now let's come to the main subject. So why GST? It's a simple tax structure. So we can visualize or we can imagine now from various different excise, service tax and VAT and multiple rate you need to remember and all those things. Like if you are a manufacturer and who is falling under the current prescribed threshold limit, which is 1.5 crore for excise, so you will have to register under excise. Then you will have to register under service tax if you are providing service, if your threshold limit is exceeding 10 lakh rupees under service tax, and VAT. Obviously, since you're a manufacturer, you will also have to take your VAT registration. The VAT registration threshold also depends on different state, the threshold limit. So you have these three different registrations, and for each of the statute, you have different rate prescribed, right? So all this will get eliminated, and under GST, you will have one simple tax structure. It will say if you are supplying goods or if you are selling goods, right? So one important thing that we will have to know is that we will have to unlearn a lot of things and which we know from the current tax structure, and then we need to relearn certain new things. So I will also tell you what are the key things that we need to remember and we need to know when we talk about GST. So first is, it is a simplified tax structure, very simple. Whether you are supplying goods or whether you are supplying services, there is going to be one rate specified or prescribed. So that is the rate that is going to be applicable. Okay. Number two, it eliminates cascading effect. Now all of you must be wondering, when VAT was introduced in 2005, the whole country made this claim saying that, by introduction of VAT, the cascading effect is going to be eliminated, right? So yes, the cascading effect under the VAT statute, the cascading effect got eliminated. So let's not get into the detailing of that. We understand the change, right? So we were discussing about the elimination of cascading effect, right? So under VAT, yes, since the input tax credit was made available under VAT, so it eliminated the cascading effect. But further, we are talking now GST is going to eliminate cascading effect. Just for us to understand from a layman's perspective, if you see the manufacturer, once he manufactures the goods, then excise is levied. Now, if a dealer, let's say I am a wholesaler or I am a retailer buying from the manufacturer. Now, when I buy from the manufacturer, the excise duty that is being charged by the manufacturer is definitely going to be passed on to the next person where he is going to make this sale invoice. Now, this excise duty, since I am not covered under excise, I don't have the eligibility of claiming input tax credit of this excise. So what happens here? Now this excise duty that has been charged, since I am not able to claim input tax credit of the excise, naturally this becomes cost to me. Number one. So now when I am selling, let's say that I am adding some margin. We have an example in a couple of slides. We will get more clarity on how this elimination of cascading effect is going to work. But I still just want to give you an introduction to it. Now when I'm selling, I'm going to add margin to it, and this excise duty becomes my cost, right? That is one. So which means now this tax is now becoming part of my cost, and the cost is going to go up. Number one. Number two is that today, if you see, first is the assessable value, then you have this excise duty that is charged, and now when you charge VAT, the VAT is charged on the base value plus the excise duty, which is tax on tax. That also is going to be eliminated. So basically, one is elimination of cascading effect, the other one is elimination of tax on tax. That's the major change that is going to happen in GST. And what is the impact this is going to have, we will see. The next is going to be a technology driven system. When we move further, and then we will see on the compliance part, we will understand how and why the technology is going to play a major role in successful implementation, monitoring, execution and administration of the GST. What GST is going to do? There's going to be an increased revenue. From a government's perspective, increased revenue through more people being compliant, because it is going to be a compliance driven taxation regime, right? And technology is going to be the key, which is going to now ensure there is transparency and the compliance is completely monitored and tracked. Okay. There's going to be increased revenue for the government, and definitely by eliminating this cascading effect and tax on tax, there is going to be some kind of a benefit for the end consumer. We will take these 4 points and then we will see that in detail in the upcoming slides. Okay, what are the highlights of GST? First is the common threshold limit across the country. Like I had mentioned earlier, each statute had different threshold limit. So if you take VAT, each state had a threshold limit ranging from 5 lakh to 25 lakhs. So if you let's take the case of Karnataka. In Karnataka, if I have to definitely or compulsorily I need to register once my turnover exceeds 15 lakhs. In Delhi, if it exceeds 25 lakhs, then I have to register. So this was the different threshold limit. But under GST, it is going to be common threshold limit. Now, the moment we talk about GST, one thing we'll have to keep in mind that when we say GST, the full form, we know that it is goods and services tax, right? So the threshold limit is going to be applicable for goods and services. Somebody could be only supplying goods, somebody could be only supplying services, or both. Okay, so the threshold limit will take into consideration the total aggregate turnover. That's one big major change that is happening, and which is a very, very good change that is happening for businesses are concerned, right? So next is basically, if you see the continuity of tax credit across the supply chain till it reaches the consumer. So under GST, now what is going to happen? The earlier example that I took was that, a manufacturer charging excise duty, the dealer, since he is not covered under excise, he cannot claim input tax credit. But under GST, irrespective of you're a manufacturer or a trader or a supplier of services, it really doesn't matter. At every point, from the inception of the goods or services or from the starting point till it reaches the consumer, whatever tax GST that has been charged in the supply chain, each of the entity will be eligible to get credit across the supply chain. Elimination of tax cascading effect in the supply chain, which the example that I took was VAT is charged on the base value plus on the excise duty. So now it will eliminate, the GST will be charged on the base value. The registration part, now it's going to be PAN-based registrations. So what is this PAN-based registration? See, like as an individual, we have a PAN. And currently, if you see excise and excise and service tax or PAN-based registration, but the VAT was not PAN-based registration. So we know that okay, in Karnataka, if 15 lakh is going to be the exemption limit, right? So I might have some 3-4 companies, right? So because I don't want to cross this 15 lakhs, I don't want to get into all this tax net, right? So this is what some of them were doing, and then this was fine. But going forward, if you see under GST, now if I am a proprietor and I have one PAN, right? So now I have, let's say, the exemption limit is, the threshold limit is 20 lakh rupees. So I have 4 businesses, right? And 3 businesses does 5 lakh each per annum, and the 4th business does 6 lakhs, so which is 21 lakhs. Now under the current regime, I can have 4 different registration under VAT, and then I still need not have to get covered under the VAT, right? But going forward under GST, with taking the same scenario, I have this 4 companies where each company is not crossing the threshold limit, but irrespective of the company that I am running, it is going to be aggregated to my PAN. So my PAN is a single PAN. All these 4 companies, when I take the aggregate turnover for the year, it is now coming to 21 lakhs. So which means now I have to register all these 4 businesses under GST. So that's what basically we say about the PAN-based registration. Very important word. The first thing that we need to remember is there is under GST, there is no more manufacture or sale or provision of services. Okay, it is going to be supply. Supply is going to be the most important criteria that is going to determine the point of taxation. So it is now supply of goods or supply of services. We will definitely cover the nitty-gritties of this supply in the next session, because I don't want uh, to scare you people on too much on the GST. First, let us understand the simplicity of GST, digest it, and then we will cover the other nitty-gritties on each of this subject. Like we are planning to cover the area wise, like for example supply, the taxation part, and various other things we will cover in the upcoming webinars, or we will share the documents. Another important thing is the valuation method. So under excise, we have broadly 3 levels of valuation. One is based on the assessable value, which is what we call it as ad valorem. Then we have this ad quantum, which is the valuation is done based on the quantity, not on the selling price. The third kind of valuation is to be on MRP with abatement that has been provided, right? So now no more confusion. Okay, so under GST, whether you are supplying goods or whether you are supplying services, broadly, okay, there are going to be exceptions. Even here there are exceptions. We will not currently touch upon that. But 90 to 95% of the cases, the valuation method is going to be, again, from a layman's perspective, it is very simple. What is transaction value? Transaction value is quantity into rate, the value. That is going to be the assessable value. Okay, that's how the valuation method is broadly considered for point of taxation under GST. Okay, another major change that is happening is that currently, if you see under VAT, when there is a branch transfer that is going to happen from HO to branch or from branch to branch within the state or across the state, basically, there are some declaration forms. We provide this declaration form, and based on the declaration form, these transactions do not attract any taxation. But under GST, now we need to recall this word supply. Under GST, what did we say? Supply of goods or service, there is going to be a tax element in that particular transaction. Now, branch transfer is basically I am supplying my goods from one branch to another branch or from my head office to my branch. Since I am supplying, now tax needs to be charged. Okay, so under GST, all branch transfers will be liable to GST tax. But what is the best part of it? Since we had discussed about in the earlier slide, we discussed about the tax credit across the supply chain. This, whatever is the tax that is being charged on branch transfer, will be available as credit eligibility, which means the receiving branch or the receiving head HO now can claim the input tax credit on the tax that is being charged on branch transfer. Okay, the other important thing. See, now this is another area where the cascading effect is going to get eliminated. So currently, if you see, for all interstate trade, especially on purchases, CST is charged. Purchase or sale, CST is charged. So now, when I am buying material, let's say I am in Karnataka and I am buying material from a supplier from Maharashtra, right? So now CST is going to be applicable. So what is the CST that is going to be applicable? CST as per the prescribed rate in Maharashtra, whatever is the scheduled rate that is been prescribed for that particular item, that rate is going to be applicable. Now, if I provide C form to my supplier, then it is going to be charged at 2%. So let's assume that I have now issued a C form to him, and then now he is going to charge me 2% CST. Now I get this material into my place of business in Bangalore, Karnataka, and now this 2% that the tax that I have paid, I am not currently eligible towards input tax credit, because since it is an interstate transaction. Again, this adds to the cost of my goods. Under GST, right, for all interstate supply of goods, inward supply of goods, the input tax credit is going to be available for the trader to use as credit. Okay, this is another major change, that is major highlight of the GST compliance. One big people, I mean, most of you, I don't think, you are into these kind of hassles, but then most of the businesses, if you see, they procuring one form from the department is going to be such a big pain, right? So under GST, no forms, no declaration forms are there. All these declaration forms are abolished. So no more declaration forms that is required under GST for your movement of goods inward or outward.